without further ado, I'd like to introduce our license collector for the City of St. Louis, Ms. Mavis Thompson. Ms. Mavis Thompson obtained her Bachelor of Science degrees in both nursing and law from the University of Missouri. She is also a graduate of the John F. Kennedy School of Government programs at Harvard University. Thompson is a past president of the National Bar Association, leading lawyers and judges worldwide. Her legal experience includes Assistant Attorney General in the Medicaid Fraud Control Unit, Senior Associate Attorney in the Health Law Practice Group for Sandberg, Phoenix PC, and most recently she served on the State of Missouri's Division of Employment Security Appeals Tribune. Ms. Thompson was appointed by the governor to the License Collector's Office. So without further ado, I'd like to introduce you to Ms. Mavis Thompson.
Good morning, everyone. Good morning. Thank you so much for coming out. Today we're going to do lessons in tax preparation. And we're going to talk about the do's and don'ts of tax preparation, how to file an extension, how to file an amended return, and tax write-offs. And so we're in for a very informative and exciting program to help you, the small business owner. We want to also thank Companion Bakery for our continental breakfast over there, and thank you for coming out. Let's get started.
Mr. Aaron Phillips has been the Chief of Staff in the Office of the License Collector for the past 6 years. He oversees the fulfillment of responsibilities for municipal, manufacturing, finance, and field service departments to ensure compliance, accountability, and customer service. Mr. Phillips will come up and share with you about the Office of the License Collector and what we do here. Mr. Phillips.
Good morning, everyone, and thank you for being here on this fall, spring, winter day. So we have all the seasons in 1 month right here. Well, aren't we really privileged? I will be very brief so that we can get right into the meat of the program. So I know that's primarily the reason you all are here. But basically, the License Collector's Office is a collecting and distributing office. We collect the taxes from our graduate business licenses, our hotel, motel licenses, our manufacturing licenses, and we distribute those monies into different areas, basically. So I call my portion your tax dollars at work. So basically, where your money goes, we don't keep that money when we collect the money from your business licenses. About 60% of it goes to the city's general fund. That's the largest portion of the funds that we collect. About 18% goes to the St. Louis Public Schools, which is a very high need right now. The Convention and Visitors Bureau receives about 15%. So those that's where the largest portion of those tax dollars go. You also go to fund the Zoo District, the Children's Fund, mental retardation and developmental disabilities resource. So there's a small percentage that goes there. So you do a lot of support for your tax dollars. Another small portion goes to the Metropolitan Sewer District. And last but not least, to support the distribution of those funds at all, about 4% of that or so goes to the License Collector's Office for the expenses of the office and distributing the funds. So I just wanted to make it clear that your funds do a lot for the city of St. Louis, so what you ought to do for yourselves now is give yourselves a round of applause because you do a lot for the city of St. Louis. Without further ado, I'll turn it back over to Chai so that we can get the program rolling again. Thank you very much for coming.
Thank you, Mr. Phillips. Our first presenter today is Ms. Alma Scarborough. Ms. Alma Scarborough retired from the Internal Revenue Service after 30 years of service. While employed at the IRS, she operated as a revenue officer, classroom instructor, on-the-job trainer, coach, officer in compromise specialist, and as a criminal investigative aide. 15 of the 30 years Alma spent at the Internal Revenue Service was as a lead classroom instructor, so she'll definitely hold your attention. Our first presenter today will be Ms. Alma Scarborough.
So here's what I'd like to present to you, class, is that we're going to talk today about employment taxes. And what I want you to know about employment taxes is that the United States, the Department of Treasury, holds that as number 1 on their list. Can I hear everybody say one? One. I mean, they're after that money night and day. I did it for many years. And so we're going to talk a bit about that. So the first thing is, in this lesson, what we'll do is we'll discuss the responsibilities of the employer. And the employer's responsibility is rather heavy because the United States has made the employer its collector, whether you like it or not. If you have employees, you the man, okay? So it's up to you to get those deposits out. It's up to you to collect it, turn it over timely. And just so that I can make sure that you know what I'm talking about, don't keep it, ever. And if you have too many employees and you can't make those deposits, if it's your sister or your cousin or your mama, you have to get rid of them, because you don't need that kind of heavy tax lien and the enforced collection over your head with employment taxes, okay? So, whether you're handling these taxes or not, a lot of people think that they can handle them in-house, and I know that you can handle them in-house, but once you get so many that you start falling behind with either deposits, payments, payroll, or any such thing like that, then I would suggest that you pay someone else, because to pay somebody else is a lot cheaper than the penalties, okay? Okay. So first of all, we're going to identify the difference between an employer and an employee. And in order to do that, we're going to show you the way around on a Form SS8, which is the determining form from Internal Revenue Service. And it's an 8-page form, but it's not geared to the employer. It is geared toward the employee. So keep that in mind. And then we're going to discuss the payer responsibilities. The employer responsibilities are, for taxes, you have to withhold that money from their paychecks, and then at the same time, you have to pay the Treasury, and then you have to pay Social Security and Medicare tax. And so the Social Security and the Medicare tax, you have to match at 6.45 each. So you pay 6.45%, and then they contribute 6.45%. And then on Medicare is, I believe it's 0.145 or something like that, but it's high. So what happens then is, class, is that you collect the withholding tax, Social Security, Medicare, and you got to turn it over depending on how much you are holding, either once a month, if you're holding like over $3,000, you got to pay it within 3 days, And the less you withhold, the less often you have to make that deposit. Some are monthly depositors, some are semi-monthly depositors, some weekly, and so you have to turn that money over. So if you don't turn it over and then at the end of the year, you issue a W-2 on monies that you have not paid to the United States, it is equivalent to issuing a bad check. Keep that in mind. So if you issue a bad check, you can expect the consequences of issuing that bad check. And so if you issue the bad check, then the United States makes that money good for the employee, right? So they go ahead and issue a refund, or if it's a earned income taxpayer, they issue a refund and a credit. And if you think you're gonna get by with that, you better rethink it, because you're not. So I want to encourage you greatly to turn that money over. Now, who don't get that? Okay, you got it. I want to make a note here that in most cases, you do not have to withhold from independent contractors. So a lot of companies, small businesses, try to identify their employees as independent contractors. And if you tell them, the person that is employed by you or work for you or you think is a subcontractor, I strongly suggest that you pull up that form SS8 and take a look at it, because it is not geared in your favor. Even if you go along 3 or 4 years and you treat a client or a subcontractor that you may think, or an employee, a subcontractor, like it's a subcontractor and then it's an employee, the United States will go back for 2, 3 years, have you file the 941s for every quarter, and then on every quarter you have to pay failure to file, failure to deposit, failure to pay, interest, and then if you decide to go out of business, well, they really don't care, because then they transfer the amount that you owe in trust fund taxes that they've entrusted to you. Then they put it on your Social Security number from now and forever and ever, amen. Who don't get that? Okay. When you pay someone for performing services, how do you know if that individual is a contractor or an employee? To figure that out, as I said, use the SS8. But the common law standard, the standard across the board states that an employer-employee relationship exists under the following circumstances. When you have the right, not that you took it, but you got the right to direct and control the worker who performs the services. So if you say in your head, in your mind, well, I don't tell them what time may be to come in, but you could. I don't tell them what to do, but you could. Or I don't tell them when to take vacations and holidays, but if they are using your equipment, your service, if you're telling them, if you do tell them, okay, let me back up here a minute. Whether you tell them or not, and you have the right to do these things, then they're an employee. So always take it from the other end. Take it from the fact that this is an employee, because on that Social Security and Medicare, those withholdings are deposited in the Treasury, and we all know that that money is not saved for a greater day. They're using that money as we speak, because you got so many people on Medicaid, you got a lot of people disabled, and that money, as it goes in, it comes out. We were supposed to keep it, but we don't. So they're looking for you post haste. I'd like you to consider the following factors. A person is your employee when you control what is to be done and how the work is done. It's not necessary to actually direct or control the worker. It's not necessary. It's not necessary. Your business has only to have the right to direct and control. Not that you exercise it, but you got the right. It's like voting. You don't have to exercise it, but you got the right. So that's on you. It goes on to say what is meant by control, and it goes to two things. It's either behavior, financial, control. So if you tell them how to behave, you say, well, get all the chairs out of this room and get them out real soon. Well, then you are controlling a person. You're controlling them. Whereas an independent contractor, he comes in, she comes in, and you tell them, say, get the chairs out of the room. And they say, well, I'll get them out when I get ready, is what they're thinking, but they don't say that to the person who's paying them. So they do a job under contract. And this is another thing, class, you cannot contract your responsibilities away. You can't say, well, they signed for this. They said that they were a subcontractor. They said that for me not to withhold on their taxes. And I found in so many circumstances when I was with the United States is that people will say, yeah, I'm an independent contractor, don't withhold on me until the end of the year when you give them a 1099, and then they say, oh no. You mean I'm not going to get a refund and I have to pay in? So you have to be careful who you're working with and who you're working for. And I lean toward the conservative end of that to say, make them employees. And if you can't make them employees, you might want to think of another way of doing business. Get your brother or somebody. Behavioral control. Do you direct when and where they work? Do you designate tools or equipment to use or where to purchase supplies and services? Do you control hiring? What about a specific individual? What a specific individual must do and how the order to follow and what order to follow when they're performing tasks? Do you train the worker? Do you have to train them? Do you have to tell them how to use the equipment, when to use the equipment, how to get along with the equipment? I've even talked several times to churches where they have musicians, and they said that these musicians are self-employed. Well, do they own the piano, or does the church own the piano? Who owns the organ? Who owns the guitar? Is it his guitar or is it your guitar? If it's the churches, then they should be filing 941s. Generally, if you have the right to control what will be done and how it will be done, the workers are employees. Also then, it's financial control. Who directs or controls the financial aspects of the work? Independent contractors, unlike employees or in business for themselves, they usually offer their services to the public. Now, if you have an employee, they can't offer themselves to the public while they're working for you. So they have to be with you at this particular time. Then also, do you have a financial investment in the business? And independent contractors have to pay their business expenses out of pocket. So in order to be expeditious here, get the form SS-8 so that you can check on the employer, the employee, which is going to be a key aspect of your business. And I'm going to flip ahead so we can get this in here because I want to talk to you about this. Independent contractors get 1099s, which is just saying how much they made, but on that W-2, you're talking about federal income, state, you're also talking federal, state, then you have local taxes, city taxes. You got to get that straight. Okay, the W-2, I'm just saying this is a W-2 or a 1099. You make a decision. And also, the penalty for each incorrect W-2 is $50, and then it adds on, for each person, and then it can be transferred to your individual Social Security number. Don't forget that, that's a big deal. And the 941 has to match the W-2. It has to go through the system, and Social Security is going to count the money. Everybody counting your money. Everybody, okay? So don't think because it looked good on your desk, you don't have to do right. And the cost of misclassification, the cost of misclassification is very high, don't do it. So this is, it will cost you greatly should the IRS determine that the people were employees. Then file your 941 quarterly. If you don't have time to do it, get somebody else to do it. And it's cheaper to get someone else to do it. Then finally here, I'm not gonna go through, yes, failure to file is 5% a month, not to exceed 25 months. Failure to deposit is from 15 to 25%. Failure to pay is 1%. So you could start out with $5,000 and end up with 10 real quick. I'm not going to go there. So here's what I want you to do. File on time, pay on time, report it correctly, and furnish the W-2s correctly to the United States. That takes community. That's my story, and I'm sticking to it. Okay, thank you.
Thank you so much, Alma. Was that very helpful information? Good, good. Our next speaker, we're going to keep it rolling, is Mr. Harry Charles. Mr. Harry Charles grew up in St. Louis. He attended St. Louis Public Schools, Southwest High School, Wash U, and the University of Illinois. Harry worked in the St. Louis Circuit Attorney's Office from 1983 to 1986, and has also been in solo practice as a tax attorney since 1992. Harry also teaches tax and accounting at Webster and Lindenwood Universities. To present to you new laws, Mr. Harry Charles.
Thank you. Thanks for having me here today. I love Alma, but she scared me when she was with the IRS. I dealt with her quite a bit. When Alma would call me, I would jump. So it's much nicer to see her on the other side now. Aren't you glad you're not Lauryn Hill? Poor Lauryn Hill. I love her music. She just got out of prison. She has another $800,000 of tax liens filed against her. I read about today. I got an email about it. So let's talk about recent tax developments. So you can see that small businesses spend a lot of time on taxes. There was a question earlier about business mileage. So you know it's 56.5 cents a mile. And I will say, I agree with what Alma said. On the other hand, I think that you could deduct it as a business expense. If you're on your lunch hour and you are traveling from one work site to another work site or in relation to your second business, I think you can deduct it. The important thing to remember, though, with business miles is that you have to keep a log, and you have to show the date, the time, the date and the business purpose for your trip. I see many small businesses that don't keep good records, and then they come to me and they get audited. They can't prove their records, their expenses, and then we end up in IRS appeals, tax court. So follow Alma's advice and keep good records. There are some even more new changes besides the ones that I'm going to show you on the slides. Now, you heard that the unemployment, long-term unemployment benefits is probably not going to be extended. That's the latest that we heard about that. And also, I wanted to tell you that the Congress is meeting in April to discuss the tax extenders. There were a number of tax provisions that expired in December of 2013. Some of them directly affect you as small business owners. For example, the state and local tax deduction expired. The work opportunity credit, charitable giving deductions were limited. Research and development, renewable energy. Congress is going to take those up in April, but we don't know what's going to happen with them. The IRS has also put out a question and answer on the individual shared responsibility provision of the Affordable Care Act, and I would tell you as small business owners, it would benefit you to consult those questions and answers so you can answer employees' questions regarding their responsibilities, because the penalty for not being covered is not just $95. It scales up according to your income. So there is some confusion about that, but the rules are out now. So here's your small business healthcare tax credit. It's 50% of premiums and 35% for small tax exempt employers. With larger employers, they're going to face a penalty if they don't provide coverage. Now, a lot of employees are covered, but there's considerable confusion about what it means to be covered. Most people are now grandfathered in under their current plans, so they are covered. And also, if you have income below a certain level, you won't have to have coverage. This is what I was talking about, that the 179 deduction was extended, but there are additional tax deductions that were not extended that'll be taken up in April. Look at these new tax rates. 39.6% is now the top rate. And then you see also the dividend and long-term capital rates have also gone up. This is making it less attractive for many small businesses to elect a flow-through entity. You're probably all familiar with people that have an LLC, for example, or a subchapter S corporation. Everybody know the different choices that you can have if you're a small business? You can set up a C corporation, but then you have to file a separate corporate return. You could set up a flow-through entity, like an LLC, a limited liability corporation. Why would you want that? Because you're a small business owner, you're afraid of being sued. You don't want a claim made against you. You want it against the business. So you set up a corporation, but you want the benefits of having that flow-through. Why do people choose a flow-through entity? Because let's face it, in the first years, you're going to have a lot of deductions. You may not be making a lot of money. You want all that to flow through to your personal return. You could choose to be a sole proprietor, which is the simplest form of being taxed. So then you're going to file a Schedule C on your 1040. And you're going to take advantage of the tax benefits that you would have as a small business owner. For example, we're going to get to it, a home office deduction. Fortunately, the IRS has simplified that for you, so don't feel afraid to have a home office, as long as it's dedicated to your business. Can't have the big screen TV in there, or the children's play area and call that your home office, or the bar. I've had clients that got audited on this issue, and the IRS has taken away their home office deduction because it was not dedicated to business. Also, it has to be part of your active business. So let's say that you have a home office and you use that to manage your investments, and you're trading in stocks, but you're not a trader by business. You have a regular job. You cannot claim that as a home office. It has to be a business. But if you have a full-time job, as that lady did, and you have another job in addition to it where you're self-employed, you can have a home office. So here's your new 3.8% tax on net investment income. You can see that it applies to people with high incomes and it includes capital gains, interest, and dividend income. Here's the simplified home office deduction that I was telling you about. It allows you to take up to 300 square feet and up to $5 per square foot. What I suggest to taxpayers is if you've got a home office, why not take pictures of it? Because think about it, might be 3 years before you get audited. What if you then change that office around? You've got your photos to show this is what it looked like when it was my home office. So you're covered. You just throw this in your tax file. Here's some planning issues to consider. We talked about choice of entity, sole proprietorship, flow-through entities, partnerships, LLCs, S corporations. So you do that because you want to avoid the double taxation. Remember, if you have a C corporation, not only does it have to file a separate return with the state of Missouri and with the IRS, and also with the city of St. Louis, but it has double taxation. So when you get paid out of that corporation, you're paying tax, but then the corporation is also paying corporate income tax. That's why so many people now choose LLCs. You can do a single member LLC and report that on a Schedule C of your 1040 return. I would highly recommend getting a good accountant if you're going to operate a business. You need to keep good records, but I would tell you to get a good accountant like Alma or another accountant, somebody that can watch over you, that can counsel you, and keep you from getting in trouble. Because if you get in trouble and you see somebody like me because you're being audited, because the IRS has stripped away all your deductions, it gets expensive. Not only that, but it's very time consuming. 2 years later, 3 years later, the IRS is saying to you, we're going to get all your canceled checks, we're going to get all your business records, we're going to summons your suppliers and your customers, and we're going to try to reconstruct your expenses and your income. It's painful. And then you fight with them. It could be 3-4 years before you get a decision from the IRS or the tax court. In the meantime, you have interest and penalty accruing. You can't pay it. You end up like Lauryn Hill, who is now on tour to pay back her taxes, I would think. She could be like Willie Nelson, who put out that record, Who'll Buy My Memories, the IRS tapes. If you remember, Willie Nelson got in trouble with the IRS, did a compromise with them, and part of the deal that he made was to record a record where he then gave the royalties to the IRS. So I can't stress enough the importance of keeping good records. What if you don't keep good records? What if things get out of control? One of your key employees gets sick, you have a death in the family, you get into an accident, and you don't have good records. It is possible to do a reconstruction. I've been successful in cases with no records or partial records of convincing the IRS that different businesses have certain allowable expenses. There are databases that your professional can use to reconstruct income and expenses. So the argument that I made is you've made this business the most profitable one in the US. When you stripped away all their expenses because you said they didn't have good records, you made them super profitable. Where's the evidence of it? So I wouldn't despair if you don't have good records, but again, work with a good accountant because you can reconstruct. As much as I think the software out there is good, like TurboTax, for example, or H&R Block at Home, I still recommend that you get a good accountant. And the last thing I want to leave you with is try to keep your business and personal expenses separate. I was looking at a business yesterday in South St. Louis, 3 bank accounts, money moving back and forth between the accounts, personal expenses getting paid out of every account. Very difficult for me to put a financial statement together for the IRS, Salma probably knows about this, where I can't explain where all the money's going. A lot of money going in and out, money being wired in, wired out. I'm scratching my head trying to make sense out of it. And if I'm having trouble, and I'm a CPA and an enrolled agent and an attorney, think what the IRS is going to think. So I don't think I have any more slides to show you. This is retirement, state and local concerns. I don't want to see you in trouble with the state of Missouri because they are very difficult to deal with. You don't want to play with the Department of Revenue or the city of St. Louis. So I brought my book in case you have any questions. Otherwise, I know you'll stay out of trouble and you won't have to see me professionally. Thanks for your time.
Helpful information? Good, good. Moving right along. Miss Mary Ingram is our partner on this project from H&R Block. She has been employed with H&R Block for 15 years. For the first 2 years, she worked as a tax professional, and she's been the office manager for the past 13 years. Mary holds a Bachelor of Science in Accounting. She also teaches advanced tax classes throughout the summer and fall for H&R Block employees to obtain their continuing education credits for the IRS. Mary will cover for us today tax deductions, amended returns, and filing an extension. Mary?
Okay, so this is the meat and potatoes of your tax returns, right? Small business tax returns can, well, she just went over this for you. H&R Block tax professionals are also small business certified, so if you ever have any questions outside of this venue, feel free to call and ask those questions. So as Harry talked about tax law changes, there could be upwards of 500 tax law changes each year. And generally, we don't know about them as taxpayers until we file our taxes, until something actually affects us, okay? So what does that mean for the small business owner? That could mean a lot for a small business owner. And it depends on, as some other folks have talked about, choosing your entity, okay? We do deal with a lot of sole proprietors at H&R Block. We also do corporate LLCs and S-Corps as well. Again, are you considered in business as a hobby? That's another thing we're going to talk about. What deductions you can take, what you have records of. What if there are changes required after you file? You file your tax return and then you find something else, okay? And then what if you can't file on time? So that's what we're going to talk about. I did have a slide also for the entity types, but it was talked about just a little bit. So if you're sitting in this room and you haven't started a business yet and you still have questions about what your entity should be, then you want to think about it. We also have a takeaway out in the audience there for the different types and how it would affect a tax return. Okay, so we'll make sure that you all get those if you don't already have an entity classification. Okay, so if you're in business, again, 3 or 5 years and you haven't made any money, you can be considered in a hobby. Okay, so what does that do for you? Your deductions are limited to your income, so you make $5,000 and you spent on expenses $10,000, you can only take $5,000 of that, okay? No loss is allowed, and then that's reported on your personal tax return. The deductions, in order for you to be able to take those deductions, you have to be able to itemize your expenses, your personal expenses on a Schedule A, okay? If you're in business, your losses are fully deductible, and the form that you use depends on the type of entity, okay? So if you're a sole prop, you're LLC with pass-through, and you want to report that on your personal tax return, that's a 1040 with a Schedule C. In a partnership, you would file a 1065, and then you have your 1120 for a corporation, okay? That's the actual tax return. Deductions, that's the biggest questions that we have are about deductions. Generally, any expense, and I would agree with Harry as well on the leave one job to go and do, to handle business for another job for your personal business. that I would agree, though, you have to keep those records and keep them separate, okay? Any expense can be considered a deduction if it's directly related to the business. This is where it becomes increasingly important for you to separate the two, personal from business. If it's required to do business or make a product, and then your examples, there are so many deductions out there, but these are just a few. Rent for space, utilities, licensing and taxes, vehicle expenses, insurance, advertising, repairs, maintenance, depreciation, depletion. There's so many out there, okay? And we do have some additional notes on that. As a tax professional, even as an office leader, I still do tax returns. So the biggest issue that I see for sole proprietors who are not classified as an LLC or as a corporation is to not have proof, okay? We see it all the time. People come and sit at the desk and they will pull things from the sky, okay? That is not the way to go. Trust me, it's not. In keeping records, you want to be consistent. Use mileage logs. Keep a mileage log. It could be a notebook, a tablet, a log sheet, however you want to do it, on your cell phone, something electronic. Again, with your start and ending mileage, if you're using the same vehicle for business and personal, again, it has to be separate, okay? With a date where you traveled to and what that mileage was. Okay, keep records and receipts in a business log or on a spreadsheet, and back up if you're using electronic devices, make sure you back it up, put it on a disk or a flash drive, and most importantly, do not guess. If you don't know it was $50, don't guess it was $50, okay? So that's the biggest issue with keeping those. If you keep an electronic version, keep your receipt as well, okay? Because if in the event you're audited and your backup for whatever didn't hold, you don't have it, your computer crashed, you don't have a backup disk, you're in a world of hurt, okay? So you want to make sure to keep those receipts as well. Now, when you go to have your taxes prepared, and you can take both, I would take both, okay? Because it doesn't hurt to have someone to revisit your numbers and make sure they're correct, okay? The next is you filed your tax return, but now something needs to be changed. So the reason that you would file an amendment, if those changes need to be made to income, deductions, filing status, or any other adjustments to be made. The biggest misconception is if you get a letter from the IRS and they've made changes to your return for you, and you agree with those changes, you do not need to file an amended return unless it's requested by the IRS, okay? The type of entity denotes how you file an amended return. Additional forms are definitely required, okay? An issue that I see with amended returns is you file the amended return and you send just that document, the 1040X, the 1120X, you just send that document without the other schedules to back the changes up. So that creates more issues for you. So whatever you're changing, you want to send that information along with your amended return. Most amendments are not eligible to be e-filed. They are accepting business returns, I believe. Now, keep in mind, a business return would be a corporate return versus a sole prop LLC that's on your personal return, okay? We haven't got the green light to go ahead and e-file those yet. Those must be mailed and may take up to 12 weeks to process. Okay? You can file an amendment for either a personal business, sole prop, LLC, or a corporate return to claim a refund up to 3 years beyond the filing deadline or 2 years from the date that you paid your taxes. Okay? Whichever is later. Then filing an extension, you just can't file on time for whatever reason. okay? The fact that you can't pay your tax is not a reason to file an extension, okay? It does not give additional time to pay. It's simply asking for more time to file. And they expect, the IRS expects at least 90% of your tax liability is paid when you file your extension, okay? An extension should only be considered when all information required to file is not available. And extension should be filed by the due date of the return and may be e-filed. So if you're filing a corporate return, some LLCs not chosen to be passed through to your personal return, the filing deadline has already passed. That was March 15th, okay? So if you're sole prop, it would be the same filing deadline that you have for your personal return, which is April 15th, okay? That extension form 4868 should be filed and an amount paid for your tax liability. If you don't anticipate owing taxes, you don't need to file an extension. Okay, if you're concerned about that, if you have a refund coming, you don't need to file an extension form. Okay? So pretty quick, pretty simple, even though it is a hard topic. I know you have more questions about deductions. Does anybody have any? No? Yes.
Say not filed a couple of years, you don't owe it. How long can you not file and receive those back?
The statute of limitations is 3 years. So you have 3 years to file. If you're required to file, of course, there are dollar amounts that make you required to file. If you're receiving a refund, it's 3 years. Okay? So you haven't filed your return for 10 years, and you may owe or you may get a refund. For anything beyond that 3 years, you won't get the refund, but you're still required to file. Okay? Yes.
You talked about that, the reasons for filing for more time or an extension. Could you go over those just a little bit more? You said some were good reasons, some were not good reasons.
Sure. The only reason that you would want to file an extension is because you don't have everything together. Okay? That's really the only reason you want to ever consider filing an extension. It doesn't give you additional time to pay. That's the most common misconception is, I can't pay by April 15th, so I'm going to file an extension. If you don't file an extension and you don't pay by April 15th, you still have interest and penalties, okay? You have that failure to file penalty and interest accrues daily. So the only reason would be if you don't have everything together. And then you would file the extension based off the information you do have. You would prepare your return to the point that you have at least some idea of a tax liability, and then you want to pay at least 90% of that. It's not necessary if you don't pay, okay? If you can't pay when you file the extension, just know that those interests and penalties will start to accrue from April 16th, 12:01 midnight, okay? Yes?
You know, in criminal law, there's always, you can't say that ignorance of the law, I didn't know the law, and so that's why I didn't abide by the law. Is it the same with your taxes and IRS? You know, there's so much information out here. How do we expect a business owner to know all of that?
Ignorance is not always bliss in that case, yes. Because if you're a business owner, it's your duty to yourself and your business to get the information, especially with taxes. You know, before you start to run a business, you have to know exactly what you're venturing into. You have to have some knowledge, some education of this area that you're getting into business, okay? So the next step is to know the tax laws and how they affect your business, what you're going off into, okay?
The difference between the federal return and the state return, and are those tax dates the same, or can you file one and not file the other? How does that work?
No, the tax deadline is the same, April 15th, and it's the same for the city as well. So if you have a tax balance due or you need to file an extension, Missouri does not have a separate form for an extension, and St. Louis City does not either, but you would still file your federal extension, and then a lot of times that information is shared between the IRS and the state. I don't know if it gets to the city level, but there is no separate form. April 15th is it. For corporations, it's March 15th. Yes.
I was going to ask, what do you think are the best references to learn the laws?
Know what entity you're classifying your business as, and then you would, I mean, there's publications, the IRS website, tax offices, advisors, accountants, things like that. We won't be able to give you everything that you'll need, but you'll have a very good start. The city does offer, and correct me if I'm wrong, business startup information, the, what is it, the Business Assistance Center. And the Secretary of State's office as well, because a lot of people will go and file for a fictitious name for the business, and they also have. Small Business Association also has a website that has great information on it as well. Okay? Oh, I'm sorry. His question was, as a business owner, where could you go to get that information? Yes. Yes, sir.
If you're an independent contractor and you're getting a 1099 at the end of the year, rather than be forced to pay a lump sum, what is the best way to calculate in terms of when you're getting paid, how much you should set aside out of each check? What is the percentage generally that's coming out for taxes?
Well, it depends on what you believe your annual income would be. So if you have an idea of that, the first year it's a little more difficult, and we just kind of have to take a guess. This is how much I think I'm going to make each month, multiply that out, and then divide it by what tax bracket that actually puts you in. But then once you have your first year and you filed your tax return, then you know what tax bracket you're in. Then we just need to make adjustments for any overage that you might be able to get. But yeah, paying estimated taxes is the best way to stop yourself from having to pay that big chunk when you file that return. Okay? Anybody else? No? Okay. Thank you so much.
Thank you so much, Mary. That was great. Great information. Does anybody have any additional questions, things you've thought about while you've been sitting there, maybe some topics that have not been covered in regards to tax preparation? No questions? All right. If you came in and you did not sign in when you got here, if you would be so kind as to just visit our registration table on your way out. We also have refreshments. Please help yourself to refreshments. And we also have a survey. Did everybody get a copy of the survey? Have they been passed out yet? If you would just take a brief second to complete that in its entirety and make sure that one of our staff gets that, we would really appreciate that. I wanted to also personally just say thank you so much to the staff at the Office of the License Collector for helping pull this together. Would you all give them a round of applause? They have been so helpful. Thank you guys so much. I really appreciate you. And for closing remarks, we're going to have Ms. Mavis Thompson come back up and give us some more wishes.
Thank you all so very much. We try to do these forums to make sure that we are helping small businesses. One of the priorities that we have in the License Collector's Office is to make sure that your business stays in the city. And also if we can attract new businesses into the city. And so by filling out the survey, the evaluation form, it will help us help you in whatever other topics that you want us to present in these forums. Thank you so very much. Again, we want to acknowledge our sponsor, Companion Bakery, for our continental breakfast, and we want to thank each and every one of you for coming and sharing your questions, and our presenters. Weren't they great today? Thank you. great day, and we'll see you at the next seminar put on by the License Collector's Office, the City of St. Louis. Thank you very much.